This is going to be my third profitable trade on jd.com. The reason is when fundamentals align with technicals, it's time to act. I've made 3 big bets on JD on the way down, by the way, and they've worked out. One of them pretty risky. I've made a few small bets that didn't, but this is one of those bigger ones that I'm probably going to be layering on if JD keeps dropping. Let me show you what I'm talking about. First, before I even get started with any kind of fundamental or technical analysis talk, I just want to say I'm not going to make the video about this, but for those of you who are new to investing in the Chinese stocks, these are ADRs, American Depository Receipts, VIEs, variable interest entities. Basically what that means is like an offshore contract company that has a contract with the company in China to share profits. So you don't actually have a direct ownership of those entities. There's always a political risk. Something could happen, just like we saw in Russia. Russian equities, including in my portfolios as well, are not traded anymore by US citizens, and I took the L. So there's a risk for that. So make sure that you account for it. You could lose everything, not just when you are betting on Chinese equities or, VIEs, but in the stock market in general. So please make sure you do your homework, do your own due diligence, consult with professionals if you need to. Sometimes we are baited into thinking that we know everything, but we actually don't. I've been in that position myself as an individual investor many times, and I've had to learn from my mistakes by losing loads of money. Please don't be me, okay? But this one I think I'm going to do all right in, hopefully. So here's why, all right? First, a quick look from the website called FinViz. It's a free website. I like to use free tools because you can just jump on it, even as just watching YouTube videos, and check out the companies and all the data and technicals by yourself. FinViz is a good kind of like first overall look website. I'm going to be using stockanalysis.com later, and I'll show you my position currently. So here's what I mean by fundamentals, right? Just a quick overlook of the fundamentals. We have some really interesting things going for us. First of all, PE ratio is about 14. Now, what's more interesting is what I'm going to show you in a little bit, which is the price to EV, to enterprise value ratio, which is more relevant for a company like JD.com because they're sitting on loads of cash, and I'll show you how much cash they have. Now, the forward P is a little bit absurd. I have a hard time believing that figure. I don't know how they get it. Maybe it's from guidance from management or whatnot, but moving along, price to sales ratio is also a little bit insane here at 0.25. A price to sales ratio for a American company of 1 for a retailer would be considered fine, would be considered great, but this was a 0.25. So of course you got to factor in, the political risk. Make sure you're aware of that. If you want whatever kind of percentage value you want to assign for the risk of losing all your money, that's up to you. You could lose 100%. I don't know what the chances of that are, so you're gonna have to assign your own risk there. I would definitely not recommend putting all of your net worth in one of these companies, though. Any Chinese company, especially if you're as U.S. national. All right, moving on with a little bit of the fundamentals overlook. We have return on assets at 3.8, return on equity at 10.39, and then return on investment at 8.51. They do pay a dividend once per year. It seems like it's kind of random as when they pay it. I don't think it's a guaranteed dividend. So, the margins look fine for retailer. They're all over 2%, which is great, including the profit margin. So that's fantastic there. They don't really have much debt, which is one of the main reason that this company is extremely investable. Now, analyst ratings, I don't really look at these because they travel with the price of the stock. If the price of the stock goes down, the company is going to get downgraded regardless of what happens. It's just kind of how analysts function. Here we have a few companies, Loop Capital and UBS, downgrading it to $49 and $43 respectively. JP Morgan, a rare upgrade in May 2022. How timely. Okay, now a little bit on the technical picture. The main thing that many technical analysts, which I'm not one of, is they do many factors, and every technical analyst chooses their own. Some of them just only use support resistance lines. Some of them do trend lines. They try to box it into brackets and squares and you name it, relative strength indexes and whatnot, Bollinger Bands, moving averages. So everybody has their favorite indicator, but one thing that technical analysts like to look at a lot is volume as a confirmation as what has happened. Now, we had tons of volume today. I'm filming this at night on a Thursday night at 9:21 p.m. 10/12/2023. We had a ton of volume, probably like 3 or 4 times the normal volume, daily volume. I'm going to show you on FinViz over here on the right. You can see the volume is 31.8 million, and the previous day was just a mere 8.76 million. All right, so almost 4 times the volume of yesterday, definitely more than 4 times the volume of the day before that, and like 5 times or more the volume of the day before that, or almost 5 times. And you can see we've had some really low volumes, like in the 4 millions, 5 millions. So definitely an outsized day of volume. The previous volume spike like this that I've seen, that I can see here, has been on in April. I'm sorry, March 30th. So 32 million, and then another one here on March 9th at 37 million. So those are the only ones I can see in the 30s within the last year. One interesting thing that we can note from these volume spikes is that normally, okay, if you see in technical analysis, the textbook says, like, I just want to reiterate, I'm not a technical analyst, I just read the textbook, right? So this is what they say. If the volume, high volume, is associated with a bearish signal, like look at this huge bearish bar, okay? It's a very bearish signal, okay? So of course we had a bear continuation, but ultimately that large spike in volume resulted in higher price. Now there's another big candle, I'm sorry, not a big candle, a volume day, okay? It was green, and this time it was associated with a bearish trend that lasted, pretty long time, okay? So it's not necessary, right? Because just because it's a green volume day doesn't mean it's a bull signal, and vice versa, all right? So, but it does signal some kind of change in direction, at least momentarily. So I'm literally betting that this volume spike is going to be turned over. So this is not the only indicator, that I'm using. Let's switch over to stockanalysis.com. So what we have here is, these are Bollinger Bands. A lot of people meme on the Bollinger Bands because they just kind of follow price, but one thing we can see here is that it's bumping along the bottom line of the Bollinger Bands. And that's not the only indicators. I mean, the RSI spiked downwards. Of course, there's a million indicators you can look at, but another thing that I want to point out, if we go to the 3+ year graph here, is that there's been a lot of action in this 20s level over the years, ever since the IPO. Right? Ever since it became publicly traded in the States, there's been a lot of action around this area. And so it's prime, from a technical perspective, point to have a change or some kind of a bounce. We're back to 2020 levels, 2019 levels, and in fact, in 2018, when we had that big scare that we're gonna get into some kind of economic fight with China, all the Chinese VIEs dropped pretty hard, and now we're almost at that territory. I mean, JD specifically. Many retailers are not suffering as hard as JD, that's true. I guess I'll briefly mention the competitors. PDD has been doing quite well. They're trying to break into the US with Temu and whatnot, and Alibaba has actually held up pretty strongly relative to JD. But one thing I like about JD is I'm going to be bouncing back and forth between fundamentals and technicals, is that it's the largest retailer in China by revenue. Okay. Now, yes, their profit margins are quite small, but they have the opportunity and the ability to pump those profit margins. I just don't think they do it for profitable reasons and for competitive reasons. I'll show you what I mean here. Let's go to, again, stockanalysis.com. And I'm not affiliated with any of these. I just want to give them credit for making great websites. So if we go to the financials of JD, first of all, look at this red day, man. Look at this. It's crazy. Minus 8.27%. I'll show you my entry point in a little bit. So if we look at the financials, we're going to go to quarterly, and let's take a look at the revenue. Like, yes, the revenue is definitely slowed down, and from this chart, it looks like it's primed to reverse, but I don't think that will happen. I do think they're going to have a positive revenue year. We can talk about why if at some other video, but I just want to run through the numbers here. Some key factors here: net income. They've proven that they can be profitable in the last 5 quarters. But not just that, okay? What I like is, I'll show you in a sec. First, shares outstanding. They've hovered around 3 billion for quite some time, so we're not a risk at getting diluted. What I want to bring attention to is actually profit margin here. After 2015, this is proof that they can keep a very tight range in their profit margin and keep it around 0, okay, for competitive reasons, and squeeze money out of their company at will. This number can be very much manipulated by the company, okay? So I really like that. They have control over their own company. Another thing I want to bring attention to is, look at this. Guys, get ready to get your mind blown, okay? Just in case you're not familiar with this company, all right? Get ready to get your mind blown right here. So enterprise value of this company is only $20.47 billion, okay? Versus the market cap of 43.78. What enterprise value is basically the market cap less cash, okay? So the market capitalization minus the cash it holds, which means that this company is holding a net cash position of $23 billion, right? So let's say we take that $23 billion, we put it in the bin, okay? The market cap of this company is $20.47 billion. So you're buying the largest by revenue retailer still, I think. If I'm incorrect on that, let me know. I don't know if PDD has surpassed them or Baba has surpassed them by now, but either way, one of the big 3 by revenue retailers in China, which is still the most populous country in the world, is only $20 billion. Companies like Walmart and Amazon, granted they're more dominant, they are far, far, far more expensive than this. So I'm going to reference this enterprise value a little bit as we go through the numbers here, okay? Continue with some fundamental analysis. This PE ratio looks a little bit different than on FinViz, but they're both in the ballpark. PS ratio of 0.3, also a little bit different, but it's about the same. Price to free cash flow, 9.15. How you like that? That's fantastic. But that's nothing compared to the EV statistics, okay? With a company with cash, maybe it's more fitting to use the EV statistics. Enterprise value over earnings, 6.79. This is trading like a steel producer at the top of a cycle. I mean, it's absolutely nuts. It's trading like, an oil producer in a foreign country that's got oil dropping by like $20 a day. I mean, it's crazy. Okay, that might be a little hyperbolic, but you get my point. EV to free cash flow, I've never seen a number this low. 4.28 is spectacular. So all of these numbers look fantastic. Return on equity, these numbers look a little bit different than on FinViz as well. They look higher. So if we take the average or the mean, it's still looking pretty good. Now, normally I don't like to see lots of employees. In this case, the company has 450,000 employees, but the thing is with large employees is it's not as big of a deal in China, I don't think, because there isn't as much like sue happy culture. In the US, if you have 450,000 employees, that's kind of a liability, all right? Not only because they can unionize, they can request, you might have to up their wages all at once. That's big expenditures, and you're gonna have to grow the company revenue a lot faster, right, than your outlays. And if you have 450,000 employees wanting raises every year or every quarter, now that becomes a little of a problem. It's just a liability issue. So I don't like companies with a lot of employees, but in China it's a little bit different. And first of all, before we even get into that argument, that's not that many employees for China, given the amount of like warehouses and just the size of the company. The amount of product they push is just incredible. All right, like we don't have that kind of scale in the States. I live in the States, for those of you listening. So anyways, these statistics are pretty incredible. All right, now moving on to the actual trade. This is JD today. Okay, the low is somewhere around 27.57. I think my entry point was 27.59, which is very low. This is on my second attempt. I attempted to enter here at 28 something, but I hit a stop loss order. I sold, and then I tried again and actually entered for 100 shares at 27.59 after losing $10 the first time around. Now, it's not to say that I'm going to keep these shares, by the way, even if we drop a lot tomorrow. So we'll see what happens. I don't have a stop loss protection on the market open. So that's part of the trade. I have more to this trade. Okay, so there's a losing strategy here. One of the losing strategy and one so far winning strategy, I think. So the losing strategy is basically a put credit spread. I have 5 of them, and they're not going to win. Okay, they're expiring. Well, actually, I don't know if they're going to win or not, but I'm guessing they might not win on January 19th in next year. So basically, for me to make some money, JD would have to go over $35. And I don't know, that's going to be risky. We'll see what happens there. But the other strategy, JD only has to stay above $25, which is very, very much doable in the same time frame. On top of my 100 shares being held. Now, if JD has a pop upwards or reverses trend, I'll probably sell the shares first, and I'll keep the puts until they get about 80% in profitable, at which point I'll probably exit the position. So I've made money this way before twice in JD. This is going to be my third time. I've lost in credit spreads a couple times, but it's really not that much money. It's just negligible compared to the bigger trades. The first winning trade on JD was quite big. I had call options bought after losing some money. I had bought call options. I turned my shares into call options back in the big initial drop days of last year. And when JD and all the other Chinese VIEs spiked like 40% up, I actually had a few call options on JD. So I was able to cash in like, I don't know, 10 grand or something like that. So that was pretty nice. Okay, moving on. Oh, that's basically the trade. Okay, so there we go. I've showed you what I've put in. Okay, I've told you my rationale. I like to see big down days. I'm a big believer in catching knives because I think it's the only real way to make money in the market. Now, everybody disagrees with that. Okay, every trader that I've ever spoken to, they're like, don't be catching knives. You're gonna cut yourself, and it's true. I've cut myself plenty of times on the knife trying to catch the downfall of all these stocks, but I've also found that that's when I've made my biggest gains. So I'm either catching knives or what am I doing in the markets, right? So this is what I do with my trades. Normally, I like to invest for a longer term period, but this is kind of a swing trade, maybe, anything from a month to 6 months. I think there's potential there. And recently I've been layering pretty heavy on things like, REITs and things have gotten really hit hard by the repricing mechanism of the 10-year yield and 30-year yield. And JD is just another casualty of geopolitics plus rate increases, and it's still, I guess, a growth company, a tech company, and therefore viewed as a long duration asset, which has been getting killed lately, along with every other long duration assets. But for a short term trade, I think it will do. I'm not saying that there's going to be a trend reversal. I have no idea what's going to go on macro wise, but I'm just seeing familiar territory that I've been in before, or the company's been in before, where there's been opportunity to make some money. So I'm going to do that. I'm not suggesting that you do that. You trade however you want. I'm going to do what I'm going to do. I'm just sharing this with you, okay? Let me know what you're doing, because I'm interested in that. Mainly why I'm sharing my thoughts here on YouTube and on Stock Twits and whatnot is because I want to learn, to see what the feeling is from other investors out there. I want to hear from people just like me who are just individual investors. I'm not a CPA or advisor. I don't run a business or anything like that. So let me know what you're doing with JD.com, if you're in a position, if you're waiting to get in, or if you're a bag holder or whatever. I'm really interested in your takes, and tell me what you're doing about it. All right, want to let this ride. Peace out.